Money FM 89.3. Best of breakfast. Companies to watch.
Good morning, good morning. Yes, it's that time to take out your notebooks to write down some of these tips that Dan Cole will be sharing with us today on companies to watch.
Hey, good Friday morning, Ryan. How are you feeling today?
Yeah, pretty good, pretty good. As always, Fridays got that feeling in the air. You can smell it almost.
I see you look a lot fresher today.
Ah.
Yeah. And welcome to Companies to Watch. That's a segment where we spotlight and stock you up with ideas of listed companies that will call for your attention. So we're looking at market trends to risks, as well as hidden gems or warning signs to steer clear of. 8855-0893. Text us and tell us whether you think it's going to be hot or not. Ryan, we're doing something different today.
What's going on?
Today's Companies to Watch, we're speeding through 3 different companies and rating how they fare based on their latest developments. So it's going to be a fairly quick analysis of the stocks that I will be mentioning in just a bit. Just to give you a quick look at what's been developing and what's been surrounding the stock, what are analysts saying about it, and brokers' take on it.
Yeah, it's almost like a buffet. You're just like giving a quick snapshot of what's going on.
Yeah, that's right. So without further ado, shall we kick things off? All right, first pick, we've got Sheng Siong. When was the last time you shopped at the supermarket?
Actually, just last week, because they opened a new store at Connects, which is in Paya Lebar. So very nice store, and it is very different from the FairPrice experience.
Yeah.
I think one of their unique selling points, or what they claim to be different in, is the fresh food in terms of the fish, the fruits, and so on. And they attract a very different crowd. It seems like some folks love going Sheng Siong.
I love going Sheng Siong, and I think it's also because of the value of the goods there. But yes, that is one of the biggest reasons as to why it's been doing well. Sheng Siong had one of the leanest cost structures among grocery retailers globally, and it still remained relevant to domestic consumers despite minimal investments made in marketing, e-commerce platforms, and membership programs. And that's in contrast to its peers, so you can see that they don't really market themselves too much out there. But it just seems like it resonates with the local consumers like you and I.
Yeah. So really word of mouth, and I think it's been working out for them. There's this loyal fan base or customer base.
You know what's the tagline?
What is it?
You don't know Sheng Siong's tagline?
No.
All for you.
Oh, yes. I remember the game show now, yes.
Yeah, that's the one. So, furthermore, in light of the supermarket operator's projected store network expansion, we've got DBS Bank expecting to see earnings growth. Just recently, Sheng Siong had reported earnings growth of 6.1% increase in its first quarter. That's increasing to a net profit of $38.5 million. Its revenue had grown 7.1% to more than $400 million from $376 million the corresponding period the previous year. That being said, we've got DBS Research Equity just recently raising the target price for Sheng Siong to $2.30 from $2 on the back of strong earnings growth and resilient margins. That's despite a volatile macroeconomic environment. If you look at how the share price is performing just yesterday, it closed off yesterday's trading session at about $1.89. Year to date, it's currently up more than 15%, close to 16% in fact. So this might reflect some growth in terms of their share price in the near term as well. So with that, I'm probably going to go with an up for Sheng Siong.
Yeah, I'll join you there. It seems like it's doing well these days, opening up more stores, and the margins are still pretty decent.
Yeah, expansion plans. Let's move on over to our next stock in focus. We've got Singtel. Is that a telco that you're using?
No, not these days. I used to when they had EPL on the platform, but I don't watch EPL anymore as well.
I see, Ryan. Well, the reason why I've brought this stock to your attention today is because it's, I guess you could call it a home name brand. A lot of people are quite familiar with the iconic telecommunications company. And just recently, the Australian Competition and Consumer Commission has announced that Optus will be paying the fine for an unconscionable conduct and inappropriate sales practices between August 2019 and July 2023. Optus has also signed an undertaking that it will improve its internal systems, including reviewing its complaint handling and improving staff training. So the reason why this has come to our attention is because it has direct applications on Singtel. But then again, analysts are saying that the financial penalty is expected to have minimal impact on the telecommunications company, considering how the group has already provisioned the penalty in its financial 2025 accounts and sees no effect to its dividend policy. So what are your thoughts on Singtel being indirectly imposed, considering the fine that Optus has to pay?
Yeah. So this is in Australia. So just to get people up to speed on what's going on. So this was back in 2024 when Singtel announced that there was this legal proceedings going on for Optus allegedly selling mobile phones and plans to vulnerable customers, including individuals with diminished cognitive capacity and learning disabilities. So sales staff apparently manipulated credit check results without consent to sell those plans, mobile phones that they could not afford, as well as failed to explain the terms and conditions in a way they could understand. So pressure selling, all these stuff. And of course, now they are paying the price.
Yeah, certainly so. A price of 100 million Australian dollars. That's 83.5 million Singapore dollars. But, well, you know, it also comes on the back of Singtel reporting a robust set of earnings for its fiscal 2025, ending 31st of March 2025. Revenue stayed flat year-on-year at $14.1 billion. Operating profit, meanwhile, rose 11.1% year-on-year. So considering the capital recycling target raised from $6 billion to $9 billion, as well as a $2 billion share buyback program in place, this seems like Singtel is on track to enhance shareholder returns, and it seems like it's keeping analysts and, brokerages happy as well. We've got Maybank Securities analysts saying that they will be maintaining their buy call on Singapore Telecommunications with an unchanged target price of $4.30. That would be about another 40 cents more to go for the current stock